Welcome back. Well, the markets are moving towards the low point of the day. We're down close to around 60 points as we speak. But we've been chatting with various corporates, and let's get straight to the management of Kajaria Ceramics. They posted a weak set of numbers over the weekend. The revenue growth was subdued. The volume growth as well was subdued. Though there was some bit of improvement on margins, the question is, can it improve further from here on? To understand that and more, we're joined by Mr. Ashok Kajaria, the Chairman and Managing Director at Kajaria Ceramics. Hi, Mr. Kajaria. Good morning. Thanks so much for joining in. Well, give us a couple of numbers. One is on the margin front. Now, the input cost is cooling off, but I'm not sure whether or not you can increase your selling price as well. Putting both these two factors together, could you tell us what kind of a margin improvement should we look at in quarter four? And also on the volume front, you're guiding, I think, for high teen growth for FY24. Are you being conservative or are you being a little bit ambitious?
See, two things. One, as far as the cost is concerned, gas prices have stabilized, and also we have started using biofuels, which has been allowed now. So as a result, cost of fuel will come down, has already come down from the month of December. And going forward, we see an improvement in margin for quarter four. What we are seeing is the margin for quarter four, EBITDA margin should be 14% plus. As far as the volumes are concerned, for first 9 months, the quarter which has just gone by has been very tough. The volume increase has only been 2%. For the first 9 months, we have done 12% volume growth. And I think quarter four, we should see about 9 to 10% volume growth compared to last quarter.
Okay, so 9 to 10% volume growth in quarter four is what you're expecting. But you said that the environment is very tough, Mr. Kajaria. So do you get a sense that perhaps you might have to scale down your full year guidance? 15 to 20% was what you've guided for the full year. What do you think you could end the year with? And does FY24 look like it could be a challenging year for you?
See, already guidance has come down in the sense that I have given you the numbers for the first 9 months and also for the last quarter. And for the full year, our volume should be around 10 to 11% max. Next year, we are looking at 13 to 15% volume growth. I think a lot of corrections which has come in the gas scenario, because we are using alternate fuels also. So the cost comes down. The pressure has been cut in gas also. I think next year should be better than what we have done this year.
Could you, Mr. Kajaria, good morning, give us a sense of, where is demand, as you see it, which pockets is demand looking strong, domestic exports, purely on the demand side, how are things looking, if you can give us some color?
See, as far as Kajaria is concerned, we are more domestic oriented. I think we are selling almost 98% in the local market, 2% in exports. And demand has started picking up. You see, October was very tough in the last quarter because of holidays. And November, December, demand did pick up. And January onwards, things are better. And I'm sure that going forward, next year should be much, much better than what we have done this year. As far as exports are concerned, Kajaria hardly does. But we have just opened a Dubai operations where we are trying to increase exports to Middle East and some African countries. But if you look at the overall scenario, exports will not be more than 3 to 4% or maximum 5% as far as Kajaria is concerned. But as a country, the exports are much, much better. Last year, overall, the country did exports of 12,700 crores. This year, we are looking at a scenario where exports should be around 16,000 crores.
Okay. All right.
Just one more question, Nigel. So you said volume growth is, you said 13 to 14% in FY24, and sales growth should be higher, 17 to 20%. Is that, are those correct numbers to look at?
Yeah, volume growth, we are looking at 13 to 15%, as rightly said by you, and revenue growth should be anywhere between 16 to 17, 18%.
17. Okay. All right. Mr. Kajaria, I just had this query. There are some new unorganized players who are coming about in your business itself. And the exports market is slowing down a little bit, though on the whole, it will look much better. If they are forced to sell in the domestic market, will that impact business? I just wanted your opinion on this.
No, already there are so many players in Morbi, as we are aware, there are almost 600 players. They've been doing their best, but it's not that easy to come in a domestic market and get out. But definitely they will focus more on exports because exports have picked up, one. Secondly, India is again a very competitive player in the international scenario after China. And we are as competitive and getting as competitive as China. So exports will pick up, and industry size, which is currently about 52,000 crores. We are looking at a scenario March 23, it should be about 57,000 crores.
Okay, so that's not a threat to you then. You're clearly spelling that out. What about the bathware segment? I recall that you had told us that you want to scale to around 500 crores by FY24. Still on the cards?
We should be anywhere between 450 to 500 crores in FY24.
Okay. 450 to 500 crores in the bathware segment. Got that. You also spoke about how you have increased discounts to dealers in order to pass on, your products, and that speaks a bit about the challenges and perhaps the competitive environment as well. Can you give us some numbers? What were the discounts earlier? How much have they gone up by? And what would that mean in terms of your operational performance and the pressure that you could face there?
See, the moment market improves, our biggest threat has been from July to October has been the gas prices and gas cut. And once this has improved, I think that scenario will water down as far as discounts are concerned, looking at the scenario. Prices will definitely not go up, but I can tell you that margins will improve going forward. What we are talking about Q4, I said 14% plus, and going forward in the next financial year, we are definitely looking anywhere between 15% plus as far as EBITDA margins are concerned.
Okay, so 15% plus EBITDA margins next year. Just a quick word on, your new capacities as well. You have put on some capacities on board in Gailpur and in Secunderabad. Can you tell us what is the kind of additional revenue that you would expect from there once these capacities come on stream?
See, Secunderabad, we are adding a capacity where we are going to make value-added types, what we have already done in Kalahasti in Andhra. And as far as Gailpur is concerned, the plant which we are modernizing is a 25-year-old plant. Normally in this industry, people modernize in 10 to 15 years. We have used the skills for 25 years and we are modernizing, and which is a small cost of 51 crores. Secunderabad is going to cost us about 80 crores. But next year, as I said, we are looking at a volume growth of 13 to 15% because some capacity is already there, some we will outsource, and revenue growth of anywhere between 16 to 18%.
Okay, all right. Well, thanks a lot for that, Mr. Kajaria. It is tough times and it's showcasing in your numbers and in the stock price as well. But hopefully you'll emerge out of this situation soon. Thanks a lot for joining in. That's Kajaria Ceramics saying that the environment has become quite tough. And in fact, now they have scaled down their guidance for the full year. Earlier, their guidance was 15 to 20% revenue growth. Now they're looking at about 10 to 11%. So they are definitely facing pressure. But let's move on and talk to CG Power. The company posted good Q3 earnings. Revenue growth was 14%. Margins have also expanded owing to better price realization, higher volumes and a moderation in input costs. N. Srinivasan, the managing director at CG Power and Industrial Solutions, joins us now to talk about that. Mr. Srinivasan, thanks a lot for joining in. I want to first start by asking you about what the opportunities are that you see as we move along over the next couple of years. A slightly, bird's eye view, because the government is doing a lot, whether it's in areas of railways, electrification, manufacturing, defense. So can you give us some, myopic view on what your own business could seek in terms of an opportunity over the next couple of years?
So, we operate in three segments: electric motors, power systems and railways. All the three businesses have multiple levers of growth. Motors, actually, we have already announced an expansion and we have already gone on record. For the next 3 years, we'll be able to grow about 15 to 20% the top line. This is only for domestic demand. We're also focusing on exports. As far as the power systems are concerned, the transformer and switchgear, these are the two main products we manufacture. Transformer industry is in a very big boom. Our order book, if you see, currently is at, for transformer and switchgear is about 2,300 crores. Overall order book is about 4,100 crores, which is 34% higher than last year. Transformer is in a boom both in domestic as well as in export. The entire Ukraine power grid has to be rebuilt, and then there is a number of teams from Ukraine is traveling within India. So we have also announced an expansion of the transformer capacity for about 125 crores, which when completed will give about 1,000 crores. But this is hardly adequate to meet the surging demand. This demand can continue for about 4 to 5 years. Entire industry is going through a boom. Almost all the transformer manufacturers will have a solid demand. As far as railways is concerned, as far as the projects, railways are the opportunity is enormous. Railways have announced 1 lakh crore capex to be implemented over about 6 to 7 years. And we are in the products business of railways. Therefore, our opportunity will nevertheless be about 10 to 15%. We can, in normal growth is possible. But once you have technology, we have got some kind of a tab with somebody, then if you participate in the project, for example, in the Vande Bharat train opportunity, the expansion of locos, etc., opportunity is very high.
Okay, all right.
Sorry, just one follow-up. You said there's 1 lakh crore capex for railways that's underway, and a 10-15% normal growth in railways is what you are looking at. Can you tell us what exactly is the order book in the railways segment right now, and what would it be, say, a year down?
So railways, we are into products. We manufacture the motors, signals, signaling products, etc. So these products are just generally supplied over a period of 1 year based on annual tender. Right now, our order book is about close to about 1,000 crores, which can take care of for the next 9 months. But again, the tenders keep on coming every 3 months continuously. But by the project orders, what we mean, the capex orders are actually for example, Vande Bharat train, 200 trains are already a tender has been floated and then responded. In the current budget, we are expecting more announcements. So these are large value items. That is where the capex orders comes in.
Okay, all right. Hi, Mr. Srinivasan, and congratulations on a rather good set of numbers. If I look at your 9-month numbers, you're growing at close to around 27%. Given that Q4 is quite solid, will you end this year for a consolidated entity closer to around 7,000 crores? And on that base, what kind of a growth can you deliver? That's point number one. Point number two is on the margins front. Pleasant surprise coming in there. The last time we chatted, you were talking about 13.5% odd. Your main industrial systems business, that's as well, delivered very good margins. So what is the consolidated margin guidance that we should be working with? Go ahead, sir.
Now, first is, we don't generally give any forecast. 7,000 crores looks up here, looks higher actually. Somewhere near to 6,000 plus, I think we can do for this year. Margins are concerned, the second quarter margins, which surged by about 4%, was a bit of a surprise. And I mentioned it's a one-off thing. It can come down by 2% in this quarter. But surprisingly, this is maintained during this quarter. Sustainable margins, I would put it about 2% lower than what we are currently getting.
Okay, all right. So that would be, so what, around 14% odd?
14% looks achievable now.
14% should be the steady state. And also, sir, on the top line, you've already done 5,100 crores. So, 7,000 may be a tall ask, but it should be in the vicinity of around 6,600, 6,700. Should that be a rough number?
6,000 plus, I think I don't put big numbers actually.
On that base, what is the growth then for the consolidated entity?
So I think year on year, I have gone on record that we'll be able to minimum double-digit growth, anything between 15 to 20%.
Okay. All right. 15-20% on a year-on-year basis. Mr. Srinivasan, you mentioned budget briefly, so I have to ask you that. Anything specific you're expecting from the budget tomorrow for the railways business?
So, see, a lot of announcements can come. More sectors can be opened up for PPP or also for private sector. That's what I expect from railways. So a couple of things I want to add. This quarter we have become debt free. We have had 200 crores of NCDs which we have redeemed, and we are carrying a surplus cash of 700 crores. This highlights for this quarter.
Sure. No, can you explain that a little bit? I mean, the stock market are always very excited about railway capex as a theme. You would have noticed. So I'm just yeah, go on.
Yeah. So on the Vande Bharat, I think we are expecting a big announcement. First time the government actually announced the entire trains to be built by private sector, and 200 trains tender was floated. So now I think more announcement here. Another 400 trains announcements is being expected by the market.
So I just had one follow-up. You said that 200 trains tenders out already, right, on Vande Bharat?
Correct.
Another 400 trains announcement is expected, is it? By when?
So announcements can come in the budget, and immediately railways can work on release the tender because they have.
So the execution will happen in FY24 is what we're looking at.
So these are long lead items. It will take about 2 to 3 years to complete the trend.
Okay.
Mr. Srinivasan, any update on the EV motors manufacturing plans? I think you were looking at a JV partner, technology partner out there. If you could give us some color.
No, work in progress. Not formed up anything. Discussions are going on with at least 3 or 4 players. So
In the next couple of quarters, should we hear by the middle of 2023?
we are aiming for that. Let us see.
Okay, all right, Mr. Srinivasan, all the best. Thanks a lot for joining in, and all the best for the budget as well. Let's see what comes through on the railways front. It has been a big focus area for the government. That's CG Power saying that there's a 1 lakh crore capex that's underway from the government in the railway sector, and they could be big beneficiaries of that. They are expecting a 10 to 15% normal growth in terms of their railways order. Currently, the order book for just for railways, which is one of their segments, is about 1,000 crores, and the Vande Bharat order is one of them. So that's going to be a stock to watch tomorrow during the budget announcements as well. Let's take.
It is down triple digit, 100 points now, which basically means that we are at a fresh low for the day. But look at Adani Green, which is actually come back up about 5% from the day's low. It was down 10 earlier. It is recovered quite a bit. 1,080 or so, I think, was the day's low. It's at about 1,022. We've got Adani Total Gas, I think, which of course is still down, limit down 10%. The new circuit is 10, a daily limit. Adani Power is down 5, and Adani Ports is continuing to be flat. Adani Enterprises at 29.36, 29.37 is up about 1.5% or so. Adani Transmission along with is the other stock which was seeing some buying at lower levels yesterday, and that continues to be off the lows. It's down just about 2% or so. So fair bit of action, fair bit of movement on these names. Mitesh is back with us for a quick view on things. Mitesh, this is a bit of another crack, but 17,550 back at those levels, crucial kind of cluster of supports around this area. Your sense?
So Prashant, I think that's the idea. I think, we still haven't got any reversal which will convince that, we should go long aggressively in this market at least. And with the event coming up tomorrow, it's difficult to be aggressively short as well. But 17,800 is my decisive level. Only above that, I'll start attempting more of long trades. Though I think right now I have stock-specific based long trades. But idea is that if we hold 17,500, 400 on a few more occasions, then I think, we might actually be doing some base building for a reversal. So we'll keep a wait and watch more on the index on. And on the stock side, UPL is something which I think is breaking out very nicely after a good consolidation. The setup is very positively biased here. So buy this with a stop at 752 or maybe 751 and a target of around 790 is what I think traders can look at. The other one is a buy on Vedant. Keep a stop at about 323 for targets from 340 as a trading rally.
All right. Just 2 quick questions, Mitesh, on the auto stocks. Tata Motors and M&M are the big movers right now on the upside and have been through the course of the month. Any thoughts here?
So, the Tata Motors was a buy yesterday and today. I think both days it was a morning recommendation. I think the stock has given a medium-term reversal on the upside, and my sense is that it's heading towards levels of around 480 to begin with, and beyond that we can look at further upsides. But I think 480 looks very likely in the next couple of weeks. So very, very positive setup, and this gap which happened 3 days back with the JLR numbers being announced, I think that should not get filled. So 432 becomes your positional stop loss, so maybe a rupee below that. M&M is something which has been outperforming, then went into consolidation, is possibly restarting its up move. The earliest swing high was closer to about 1355, 1360. Once we clear that, it should be all-time highs, and then the stock can head towards 1450 levels.
All right. Thanks a lot for that, Mitesh. Let's shift focus now to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking this morning?
Sonia, I'm looking at the soft commodities, and almost all of them have been trading on the higher side. So whether it's wheat, corn or sugar, by the way, is what we are tracking right now, because the international markets have seen sugar prices hit to a 6-year highs in the markets there. And the London sugar price is also trading at a 1-month highs. When you look at the raw sugar prices itself, we are trading at above 21 cents a pound. So a lot of support coming in for the sugar prices. And these are factors which are from India, which is the second largest producer and exporter, and Brazil as well, which the markets are looking at right now. Taking a look at Indian markets, markets then, and we are looking at Maharashtra sugar mills stopping crushing almost 2 months before the season is getting ended. Remember, we did see the mill start the crushing also slightly delayed this time around because the crop came in later. There was rains during the harvest season there. So all of that really has impacted the Maharashtra output, which is estimated at 12.8 million tons versus 13.8, which also was an estimate. So we are looking at 1 million tons lower than what the previous estimates were. Also, when you look at the exports itself, 6.1 million tons was allowed. Out of that, 5.7 million tons has been contracted. And the expectation is that by the end of May, you will see all of this getting exported. Now, here as well, the number is quite low because last year we exported a record 11.2 million tons. So we are nearly half of that. So one, there are concerns on production, and two, the export review could also come under a bit of a concern here. And the third thing really is about the international markets, where as well you are looking at lower production. Even as there is higher number coming in from Brazil and Thailand, they have increased export prices, understanding that India perhaps will not be able to contract much more than this. Brazil's Petrobras also has increased the gasoline prices by 7% for distributors. That has led to more cane going in for ethanol rather than sugar. That has been supportive. And then the Europe also is looking at lower production by 7% this year. So they are going to be in the international markets wanting to import further. All of that keeping the international prices on the higher side. This is what we've done in sense of prices, 7.5% on a week and 17% in last year, with the markets anticipating that we are headed higher from here.
Okay, thanks a lot for that, Manisha. Well, the budget is upon us, and it's ultimately about taxes and incentives to save. So what should we watch out for in this budget? After a short break, Lata will discuss tax expectations with Sudhir Kapadia of EY and Himanshu Parekh